The head of the Securities and Exchange Commission is warning against fraud and laying out sweeping reforms to boost the country's capital markets, which she admits are lagging behind our ASEAN neighbors. Jin Kim has this report.
We will not tolerate fraud, manipulation, insider trading, or any serious misconduct. We will act forcefully when the public is at risk and act with fairness.
This was the warning issued by Securities and Exchange Commission Chairman Francis Lim before members of the business community, as he outlined his concrete reforms to simplify and streamline the country's capital markets, following his reminder that the Philippines is struggling to keep pace with its regional peers.
We must confront a hard truth. Our capital markets have been lagging behind. Despite its age, our stock market is now much smaller than our ASEAN neighbors.
Lim pointed out that Vietnam now has 700 listed companies with an annual trading value of nearly $18 billion, while the Philippines has fewer than 300 listed firms and just $3 billion in trades. In response, the SEC is targeting more listings from large and small enterprises, legislative franchise holders, and eligible GOCCs. Reforms include revisiting the share registration framework, easing rules on exempt transactions, and pushing amendments to float and REIT rules, as well as measures on pera, short selling, and repo markets.
These are not easy expectations, but we at the SEC will not shy away from them. Let that be very clear.
The SEC will implement blockchain validation for its documents to combat forgery and strengthen digital trust. This will be supplemented by a 50% reduction in document fees and discounts for small companies seeking to raise funds through capital markets.
Our goal is simple but urgent: to deepen and democratize participation in the capital markets so that funding is not just available to a few, but accessible to all enterprises, big and small, with sound governance and vision.
As part of this drive, the SEC issued Friday morning Memorandum Circular No. 10, Series of 2025, directing all listed companies to end the classification of common shares into Class A and B, a 1973 rule originally designed to monitor foreign ownership limits, but now deemed obsolete due to modern trading systems. In closing, Lim called for stronger cooperation from both the private sector and government to ensure the full implementation of these reforms. Jin Kim, Billionaire News Channel.